Now, there can only be two scenarios that price can look to sway between within a given day or a given session. It's either you're going to have a reversal model day/session or a continuation day/session. There are numerous other ones, but I've summarized them to these two main frameworks so it keeps your trading simple and repeatable. Now, with our reversal model, it starts off with price following a certain market incentive. So in this example, as you can see, we are following that very strong bullishness up until we reach a POI or some sort of PD array. Now, this can come in the form of a fair value gap, order block, or a previous week high. Any sort of zone we can see price rejecting from, it would be applicable in this regard. And once price reaches this zone, it will give you a clear display of rejection, which is your sign to see that we have started off a reversal. And it's very important to understand that once this move has been given, price will usually look to follow in that same direction to target the next round liquidity to be at these lows, which is why very easily you can identify your next candle following very strong bearishness to the downside. So your goal should be able to trade this sell candle to the downside. Now, with our continuation, it differs in terms of complexity because with this, you already are displayed very clear direction. Price is displaying to you very strong candles in one direction, as well as giving you that very strong fair value gap, which can be supported to hold price higher. Now, even if we're following a continuation of a trend, we still need to grab our liquidity to ignite the next move, which is why this is a very simple two-in-one setup that price can use to fulfill a fair value gap as well as sweep liquidity at a prior daily high, at a prior day high or prior day low, or a prior 4-hour high or low. So you can see this example, fair value gap created, we take out the previous candle's low point and then we reach the third candle. And what does this do for us? It gives this massive bullish candle that has a lot of rejection but follows in the same direction of our trend. Now, it is also very important to understand how the candle is formed out. And I've already done numerous videos where I do mention candle anatomy, where I've been displaying it in confluence with our candle range theory, as well as our candle impulse theory, where we use the candle close. But it is very much applicable with this model as well, because as you can see, here's our impulsive move where we open, push lower, and then distribute to the upside. As you can see, it's very clear to see that price only following one real direction. It is prioritizing for the bullishness. And even when we do start to close our price, we'll have a very minuscule bearish move. So just with this, you can already see that this candle is massively bullish. So you should not have any confusion with understanding the direction of that session. However, with the second model over here, we see that price does follow the same signature of opening, pushing lower, then distributing higher, but we have a lot more bearish rejection being inputted by this candle. Now, this is extremely important because when you see that the bullishness and the bearishness are pretty much 50-50, and our bullishness, which was strong in the start session, gets impulsively rejected away, you understand that price is giving the forecoming of a reversal, which is why it's very common to see that price starts to reverse in the upside direction with this move, which is why this is usually called a rejection candle or a reversal candle, just because of these key features. So let's go into some examples comparing a higher time frame candle with a lower time frame movement. Now let's talk tools. Where you can imagine this as your previous daily candle or your previous 4-hour candle. But as you can see, we try and break and close above this daily high. Even though we look to push above that level, we see that price later on in the session fails to close above. Now, this is extremely important because seeing this failure of displacement usually means that the opposite opposing nature, which would be in this case, the opposite opposing nature in this case, which would be sells, would then take priority in the next session or in the next candle, as it leads with the strong rejection, which is why you can expect your next candle to be a strong reversal candle, targeting the next common draw on liquidity. I'll take a look at this example here. So just to make everything clear, this is our high time frame movement right here, and this is our low time frame movement. This is the first candle one, where we see that price is extremely bearish, which leads to this extreme bearish nature to the downside here. We then go into our second candle where it's a lot more consolidative and a lot more indecisive with price. We start off this session bullish, we create a change to delivery, we then retrace back down to that prior candle low point. As you can see, we still then lead off with that bullishness. Why? Because you're also tapping off a common PD array over here. Then lastly, our third candle is now simply just going to continue the movement that was last presented. So you can see, once you start to notice these signatures, it becomes very easy to predict the next candle and trade the next candle because all the context is already given to you pre-market or pre-session. So easily, once you see that large wick being presented with strong rejections with the next candle following a bit of bullishness, you can understand that this is easily going to be your next bullish candle to the upside. And you can see very simply, we now have a massive bullish candle to the upside, and you have traded that entire move targeting the drawn liquidity at the highs. Very simple. Now, here's our next example. Once again, identify this as your high time candle and all of this as your lower time frame movement. So as you can see, we are solidly giving clear bullish signs. We have one bullish candle, another bullish candle, and a third one where we see that price is extremely impulsive and leaves off this very clear fair value gap. Now, just like price always trying to be efficient, it wants to do two things: sweep liquidity as well as fill fair value gaps. So just like that, price is now completing two of its main objectives. It sweeps out liquidity from the previous candle, and as you can see here is that previous liquidity from our previous session. It then gets taken out. So this is actually very similar to what you guys should identify as a turtle swoop. Okay? As you can see, it in that same motion fills out our fair value gap right over there. Now, just like that, we can now expect our very next candle. So this is the first, second, and third. First, second, and third session. It will look to continue that movement to the next drawn liquidity. So very easily, your bias should just be clear, bullish direction where you're looking to enter and trade to the upside there. Perfect prediction of the next candle. It's like that price follows in your direction. And as you guys can see, it's not just pattern trading, where it's still using the context of the market to give rise to our intuition to actually trade a lot of these moves. Now, I already have made a full ebook explaining all the different schematics of how I could display different candlesticks and then comparing that to lower time frame movement so you can trade and predict that next candle. But the main core factor is that there are only two scenarios that price will usually look to swing between, either continuation day or a reversal day. Let's hop into some live examples. Let's hop into the example. Now, I will make this interactive so you guys also training your bias detection. So just focusing on our recent candle data, you can see that our candle behavior firstly was initially very bullish. Then we have been having a lot of consolidation so far. But with this, as you can see, we have created this massive fair value gap, which price has been continually looking to reject off of. Now, this is my 5 o'clock candle, which is the main candle I use for my candle ranges for the day. So for our time frame, UTC -4, I'm mainly using this 5 o'clock candle. If you trade futures, this would be the 6 a.m. Eastern Standard Time candle. But very easily, you can see price has firstly already done one of its objectives. It has filled an FVG. Now, the next step is to sweep liquidity, which does come from this candle low point. We're going to our lower time frame here. As you can see, liquidity is residing at the lows right here, as well as the highs right over there. So let's look into this here. Right now, what are you guys looking at this as your bias? We say bullish, very well done, because our high time is bullish and we're also within FVG. So you can see we have just taken out very clear liquidity. So now simply we just want a reversal some sort, so we can get a change in state or an inverse of this fair value gap. Okay, so very clear sign by price there, does not confuse us in any regard there. Yeah, it literally just looking to trade into that next high point there. And as you can see, look what our candlesticks are doing. Here's a high time candle. We've just swept that low point and look how it's already rejecting. As we said, usually the third candle or second candle is mainly done to make the reversal. So here we can see there is that reversal right now. Third candle will look to continue that. Let's see how this plays out here. I can see very well into the next session. The next day, price is still following that incentive. Now we go back to our high time frame candle here. So 4 hour, what we can see is that very well done. We have traded that candle wick high, and we've also predicted how it's going to form out just by using this very simple playbook. Build the fair value gap, swept the liquidity, continued the trend. So just using the current candlesticks, what would be your bias? Okay, it's pretty hard to see. Let's just dissect this. We already are bullish. We're seeing a bit of recent bearishness, but what we also want to remember is that this is our 5 o'clock candle, and for our time frame, this is the 1 o'clock. And what are we doing right now? We have just swept out this 1 hour low point, and this would be the 1 hour high. Now, there was one thing that I didn't fully mention to you guys, that with the 3-stick predict model, usually it is made by, in my use, I use the 1 o'clock candle for my first candle, the 5 a.m. candle for the second one, and then the candle I truly trade is the 9 a.m. candle, which is just at New York market open. But as you can see, those 3 candles make out our 3-stick predict candle. Now, this also does apply to your daily time. So it could be like Monday, Tuesday, and Wednesday, but just using the 4 hour, this would be the 1, 5 a.m. and 9 a.m. And once again, if you trade futures, this would be 2 o'clock, 6 o'clock, and then 10 o'clock a.m. Eastern Standard Time, making sure you are using the UTC -4 there. So back to what we're looking at here. What we currently have here, this is our 1 o'clock candle, and this is our 5 o'clock candle. We are now expecting 9 a.m. to be a wonderful bullish candle. Let's look at this on the lower time frame. So very fast, we see that we have some very interesting price action here. Really, for the entire pre-market, just been creating liquidity above highs and lows. Make it very easy for us because this is a simple sweep of liquidity at the low lows to target liquidity at the highs. So as we're about to start off our third candle here at 9 o'clock, we're going to be looking for that reversal. So as you can see, as we start off the 9 a.m. candle, the third one, we're already starting off with a clear reversal sign. So we are looking to predict this as a bullish session. Stop at the lows, targeting that high there. And as you can see, this should also remind you guys of our very common AMD model. So accumulation, manipulation, distribution. Okay, or even as well as the RS model, impulse into a range into a sweep. So now with this, let's look back at that 4-hour candles, and on the 4-hour, very clear display of bullishness. And even going further on, we're going to still see price continue this. Now let's go over one more. Now let's go over a few more. Okay, next chart. What are you guys thinking? Bullish candle or bearish? Now in true regard, this one is a bit more difficult. Once again, by following the key signatures I've taught you guys, you'll be able to dissect and form a clear bias. So first thing that should be very apparent to you that we have had numerous wick rejections. Now, this isn't just a common candlestick fallacy. We understand that with each wick rejection, what is happening on the lower time frame, that we're having strong rejections with each one that has been created. Now, this should be stemming for a certain level. So very easily, if we can just extend this to the left, actually we can just rotate to this order block here. So just prior order block, the price is rejecting off of. So we understand where our PD array is supporting price from. Very good. Now looking very close at our current candles, you would be tempted to think of the prior candle high close below, then this one should be bearish. However, yes, that is good, but it needs to form in alignment with context. Okay, even the first candle, usually want that to be a lot more bullish to still see us show that intention. This is a lot more wick like, as you can see. So instead, we want to be focusing on this prior order block right here. As you can see, price creates this order block, pushes up higher. We are now retesting it. So third candle, we want that to give us a reaction to the upside. So it's still very close to our continuation model. Instead of using a fair value gap now, we're using an order block to push price higher. Let's actually just mark this out, and then we mark out this as our liquidity points. So over here, okay. So first things first, we're seeing that we got that very clear reaction, okay, of a sweep to the upside there. Okay, ideally this is where we want to be entering, but then price will give us our retest, so we don't always have to have a need to form in. So just using this order block right here, simple case of refinement, on enter your trade right over there. So obviously in live time, you would see this candle start reject and you wait for close, but just very simply you want a simple move like this. And there you go. Okay, very fast movement from there, and price just spirals up forward. Once again, what time is happening at 9 o'clock? I mean 10 o'clock, which is New York market open for the 4-hour candle on futures. Let's go over one more example using the daily time frame. Okay, a bit simpler with what we're being shown here, but very clearly, what's the next candle on the daily time frame here for you guys? Okay, let's dissect this. So firstly, we marking out our period array. There is a clear fair value gap. Now, what have we actually done with the current candlesticks? We're taking this prior day's low, and we have this prior day's high point that is unfilled. So with this, we've already done our 2 steps, which is filling a fair value gap and simple liquidity. But now the third one is to just target the next strong liquidity, which would be this high, which can only be produced by a bullish candle. You see how, guys, we are dissecting the equation until we get our direction for the day. And once you actually find your bias, you want to stick to it and follow through with it. So we're going to hop onto a lower time frame here. Okay, so on the lower time frame here, we're going to look until we start off the new daily candle, which we have. Let's firstly go over everything here. First, bullishness on the first day. Second day, we had strong bearishness. Third day, we want to see how we actually play out. So we want to look for, once again, any change to delivery. So same. Okay, so here we are getting a very clear change to delivery off of price. Very clearly making change to delivery and closing above our candle opening there. So just stop right over there, placing the stop loss just below our higher low point, and then we targeting that high right over there. As you guys can see, still the same concept we're using on the 4-hour, just applying to the daily. Placing a buy here. That's how price plays out here. Pay attention to that daily candle. As you can see, a lot of movement going on there. Okay, so we take a loss on the first move here. However, we're not wrong with our bias because that daily candle is still continuing this higher. So we still apply the same notion. Look what we do. We try and close below our previous daily low point. However, we fail to just immediately give us a rejection back up. So with that, once again, entering another buyer, stop at the lows there, targeting higher. So let's see if we're a bit more lucky with this one. As we said, we want to stick to our bias because we already made it very clear to ourselves that we're gonna look for that bullishness. And as you can see, took a bit of time, but still we end of the day net positive. So as you can see, that is how you want to dissect time frames, dissect candlesticks to form out a very simple bias. Your goal shouldn't be perfect. It should be to have a repeatable framework to get your perspective for the day, get direction, get your bias, and follow through with that despite any other movement that you are seeing within the market. Now, once again, you guys will see a full schematic of all the frameworks I use to predict the next daily candle and actually beat the market using a single candlestick every single day. You can click the link in my description. I made a full ebook explaining everything I use every single morning. If you guys actually want to trade with me live, you can also join me as I do trade this, not just in hindsight, but on the live market with you guys. Finally, the free course to all this is within the description with our weekly outlooks, which you guys can get from our newsletter. Now, if you guys want to start to master your daily time frame even more in depthly, I made a full video on that. And if you want to look to master the 4-hour candle, I've also made another video on that, as well as a full playlist.